Well, the year's winding down, and that has a lot of us organizing our thoughts and looking to the new year. Certainly, 2012 has been an eventful one economically. From Europe to Washington, from jobs to housing, from China to the greater Cincinnati area, 2012 was something to behold. So, what's next? We have asked our U.S. Bank Economic360 host, Jim Russell, to come in and shine up his crystal ball and look into 2013. Welcome, Jim. Good to see you.
Good morning, sir.
All right, we started the year of 2012 worried about Europe. We ended worried about Washington. What does U.S. Bank see for 2013?
Well, Brian, we see a couple of different dynamics. Number one, we're going to start the year slow. We do think the fourth quarter GDP, fourth quarter 2012, will come in the range of about 1%. We're going to start off in the 2% range, we feel, for the first half of 2013. And we feel like we'll accelerate to something like 2.5% to 3% as we move through 2013. So we're going to finish a little bit strong. We're going to start a little bit weak. A couple of dynamics to keep in mind. Interest rates will indeed remain on the low side. The Federal Reserve told us just recently that they're going to be in charge of engineering that for us. That will play into a stronger housing market. We think unemployment slowly drifts down, 7.7 right now, perhaps call it 7.2, 7.1 by the end of 2013. So modest improvement as we move through the year.
All right, in a global economy, we're all linked together. We've got what happens in China and Europe and the United States. It all affects each other. What do you guys see here in terms of the global economy? What are the moving parts that we will be watching?
Yeah, a couple of things come to mind there as well, Brian. We think that China is going to be an important influence in the global picture for next year. They're the second largest economy in the world, right behind the United States, and we feel that the growth rate there will move from 7% to perhaps something as fast as 8.5% by year end. That is a very fast growth rate. Importantly, that's going to drag the emerging markets with it as well. Unfortunately, we do not see much improvement for Europe. We think Europe remains very mired in a very slow growth recessionary period, unemployment very high. We think the financial crisis elements of Europe perhaps have gone away, but again, a very stagnant economy.
All right, so the election is behind us. That's one thing we don't have to be concerned about at this point.
Right.
What are the concerns that are facing our economy in 2013? What are some of the things that you're watching that you think could be a little bit challenging?
Yeah, there are two things that come to mind there, Brian. Number one, of course, front and center is the legislative and political environment in Washington. We're going to have to raise the debt ceiling in the spring of 2013. We're also probably going to address entitlement reform at the same time. Both very contentious issues as we move forward. As you know, the House and Senate are not necessarily getting along these days. The second thing that we would point to is that we're a little concerned about what's going on in the Middle East. Iran, Israel, Syria, Iraq, a few of the countries that perhaps could drive oil prices higher. There have been troop movements in recent months. Perhaps right now we're at a little bit of a ceasefire. We're hopeful that continues, but we cannot be assured. And I tell you what, developments there matter a lot.
Yeah, anytime there's military conflict, it puts the economy on edge. We appreciate you, Jim, and U.S. Bank. Thank you.
Thank you.